Welcome to Virtue Focus Accountants. Today I'm going to help you understand how UK VAT works. Let's get started. VAT stands for Value Added Tax, which is an indirect tax on the sale of goods and services, hire of goods, sale of business assets and commission. You need to charge VAT once your business turnover hits £85,000 per annum. Once you hit this target of £85,000, you must register for VAT the following month. By £85,000, I mean £85,000 in the last 12 months, not just your financial year. You also have the option to register for VAT voluntarily, even though you don't meet this target. As an example, if I get an invoice from a business where there's no VAT included, the general assumption is that business doesn't make turnover of up to 85,000. So for your profile, there may be a benefit being VAT registered, even though you're below the threshold. There's also a benefit in terms of making claims on purchases made. So if you're a business that makes a lot of purchases that you can claim VAT on, there may be a financial benefit to be VAT registered, so you can benefit from making VAT claims to HMRC. Lastly, as you can reclaim VAT going back 4 years, there may also be a benefit to being registered for VAT even though you're below the threshold. The standard rate for VAT is 20%. So on output VAT, you would add 20% to your actual sales amount. There's also a reduced VAT rate of 5% on certain products, sanitary products, child's car seats. And there's also a zero rate for most food products and books, newspapers, as well as a VAT exemption on postage stamps and financial and property transactions. Every business claiming VAT needs to be registered for VAT with HMRC, and as part of this registration there's certain invoice requirements. As you see on the screen, you need to have your invoice number, invoice date, VAT registration, business details of your business and also your customers, and there's got to be a description of your goods and services. And in terms of the amounts, you need to have the price excluding VAT, the VAT amount, the VAT percentage, and the total amount including VAT. VAT due to HMRC needs to be filed in a quarterly return, and there'll be two ways to do this. You're either part of a flat rate VAT scheme or you're not. On the table here, you can see the flat rate percentages for certain businesses. What this means is you would have this predefined percentage set with HMRC. You would charge VAT at the full standard rate as an example, so 20%, but what you pay to HMRC is the percentage on the screen gross. As an example, if you're a journalist, you would pay 12.5%. Let me take you through an example. So in this example, the journalist has made a sales of £100. It's £100 and you get VAT on top of that is 20%. So the total invoice is 120. What happens with the flat rate scheme is you charge 20% out, but what you then pay to HMRC is 12.5% of the gross. So in that table I showed you earlier on, the flat rate scheme for the journalist is 12.5%. So they would pay 12.5% of the gross, which ends up being 15. So they charge 20 and they pay HMRC 15. That difference between what they charge and what they pay is really the benefit of it. Slight change in the tax laws a couple of years ago, where we have what's called low cost company. So a company that has cost of less than 2% is termed low cost company, and that means they must apply a flat rate scheme of 16.5. This effectively takes away a lot of the benefit of being on the flat rate scheme. So what I'm saying, it may not be in your best interest to be on a flat rate scheme if you're a low cost business. Also, if you're a business that makes loads of purchases, you may be better off outside of the flat rate scheme, as you can then make claims from HMRC. You could actually end up getting a refund out of HMRC. One more thing to add is you can only be on a flat rate scheme if your turnover is less than 150,000 per annum. So as mentioned earlier, you can claim the VAT paid on business expenses and purchases. You can't do this, however, if you're on a flat rate scheme or if you have entertainment expenses. Point to note is you must keep records for all the claims you make. HMRC is flexible in that they will accept most methods of payment, as you can see on the screen. VAT can now be submitted digitally to HMRC under the Making Tax Digital approach. Seek advice from your accountant on the VAT approach that works best for your business, and ensure your accountant is tax digital ready. Thanks for watching. Please give the video a thumbs up if you find it useful, and do subscribe for more finance and accounting insight.